I am recording.
Okay. I'm just heading over to Facebook and I am hitting, it says it's waiting for live video. What is going on? Okay. Is people coming in? I can't see it.
No, we don't have anyone there. 0 attendees.
Let's see here.
Oh, someone just popped in.
And the video is rolling, right? For some
Yep.
reason, it's not going live on Facebook.
Hi, Sheila. Welcome.
Hello, everybody. We're going to start in just 1 second. I'm just trying to figure this out here. Going live on Facebook. Okay, sharing on a page you manage. Andrews Acorn Project. Okay, everybody, we're going to start in just 1 second. So hold on for this exciting adventure that's coming your way. I'm trying to get it. We try to do all this different technology. Credit 101 right here. Boom. Go live. Okay, that should be going live on Facebook in just 1 minute.
I see it live on Facebook right now.
Okay, all right. Sounds good. Okay, all right. Well, let me go back to my presentation. And all right. Well, hello, Sheila. Yes, I think you must be muted. Yeah, right now we're doing this in the webinar format. Sometimes we do these in the meeting format, and then you're automatically unmuted. And then here I'm actually going to hit you. So now you are unmuted. Yeah, I don't think you're unmuted. So you can come off mute if you want now.
Okay.
Hello, Sheila. How are you doing?
Good.
How is Nevada doing? I'm missing coming back.
It's cold right now. It's cold.
Got it. You know, I was coming across some videos. I don't know how I was coming, exactly what I was searching, doing my research, but I saw that you were doing a lot of presentations with the Historical Society over there in Nevada. I saw some of the stuff that you were doing. I think you were you like beading or basket weaving or something? For some reason that slipped in my mind, but I remember that you were doing a cultural presentation.
I don't think I've ever done a cultural presentation for the museum, unless they use some like footage from like when we were set up at like their powwow.
Okay, yeah, because I remember there was a gentleman that he was interviewing you or something. Do you remember?
Are you sure it was me?
I thought it was.
It
but
might
if it's
be
not you,
I've never done anything like that unless it was it on the PBS thing?
It could have been the PBS thing.
Yeah, because I did do a PBS thing for this shop that I was selling like a kind of like, I don't know what you call it, consignment or whatever, where you put your stuff in their shop and they help you, it's like a storefront and you could sell your beadwork or whatever you want to put in there. And then they have little presentations and they asked our beading group to do a presentation. And then we also did like other things like our baskets and stuff that we've done. Not just me, there was other people. Yeah. It was fun.
Did you participate in that beading circle that Melissa Malero did over there a while back?
No, I missed that.
Oh, okay.
I sign up on all kinds of different, I sign up on a lot of different things. just, trying to get, more knowledge and, whatever. So
Right.
I do sign up on a lot of different things, but some of them are like too slow and they don't talk and so I was like, if you're instructing, then, just at least show us how to do it, even if you don't have to say anything.
Right,
But yeah, so
exactly.
like if it's really boring, I usually click off and go do something else because, time is precious, for me to get everything I need to get done. So
No, I definitely understand. So, well, you know what? Then I'm not going to delay. Hello, Robert, and welcome. You know what I'm going to do is I'm just going to get rolling. We're live on Facebook, so hopefully we have some people joined over there. And I'm just going to roll through this presentation. Even though we only got a couple of you, I think other people may join as we go through. And if not,
I wasn't trying to rush you.
no problem at all. No, I don't want to be late either. Sheila, but I am just going to mute you just in case there's any background noise, but feel free if you want to talk to come off mute. And if Robert, the same thing for you, I unmuted Sheila previously, but if you're interested in talking, just let us know and we can, because we're in a webinar format, so we have to come in and actually unmute you ourselves. It doesn't happen automatically like it would be in the meeting format. But anyway, so I just want to welcome everybody. This is Credit 101, and I'm just going to kind of go through this presentation. I was actually going through it last night in preparation of this evening, and I cut out some stuff and wanted to get you guys kind of the bare bone essentials of improving your credit and kind of finding out, where to get information on your credit and your credit score. So that's what Credit 101 is going to all be about. So I hope you're in the right location. And we'll start here in just a second. Just wanted to first say thank you to some of the sponsors of these webinars that we put on: the USDA Rural Development, the U.S. Small Business Administration, and the California Governor's Office of Business and Economic Development. They each provide a small portion that funds each of these webinars. So we definitely want to thank them for all the support they provide us and allowing us to present this good information out in Indian country. So who are we? We're the Indian Dispute Resolution Services. That's our official name. However, a lot of you may know us as the IDRS Acorn Project. That is our small business development program. And so, but we have another program that's dedicated to dispute resolution. We've been around since 1989. If you want to find more information about that program, that's on our website, idrsinc.org. But of course, we have our other website that we have built specifically for Native entrepreneurs, and that's nativebiz.org. And of course, that has all the information on our events. If you want to request technical assistance, getting help on anything, getting help improving your credit, for example, applying for some of the grants that we have coming down, we've had those services there as well. And we're always trying to improve that with putting some more information up there and more knowledge and the webinars that we take, putting links up there, so you guys can check that out. So that's nativebiz.org. Please visit there, and I'll show some of these links later on in the presentation as well. Who I am? My name is Mark Thompson. I'm the executive director. I've been here at IDRS for about a little over 17 years, and I'm the one that helped start the IDRS Acorn Project, our program here, and I'm a really big believer in small business and small business development. So I mean, this is really kind of fun stuff for me. Any questions you ever want to get a hold of us, this is our number, 916-482-5800. And my email is mark@idrsinc.org, and I will be sharing that again at the end of the presentation. So what are the objectives in this webinar? Okay, so a few things we're going to do here, and it's going to seem like a lot, but we're actually going to be able to get through these fairly quickly. And I think you'll find you'll get some steps to, there are going to be some kind of walkthrough steps for you to be able to go through this. So the things we're going to do here in this webinar, we're going to learn the importance of credit, learn what a credit report is and what is on it. We're going to learn how to get a credit report, and we're going to learn how to get it free of charge. I definitely should have put that, because that's one of the key things. We're going to learn what your credit score is and how it is calculated, and kind of what the difference is there between a credit score and a credit report. We're going to learn how to get that credit score as well. And we're going to, at the end of this, we're going to, because obviously, if you have those two things, but you may have a lot of issues with your credit report, or you may have a low credit score, you want to learn how to improve your credit. So we're definitely going to have some tips how to improve the credit score, and just in improving the numbers, but then also going in and what are some steps that you can take to actually to build it long term and raise your score and keep it high. And then also, even if you have good credit, you can't just rest on your laurels. You have to protect your credit, with all the identity theft and things like that going on. So we're going to talk about that at the end of the webinar. So let's get started. This is D1. We're first going to talk about credit reports. So this is our first section, and he sings a song called Sally Mayback. And Sally, and the thing, it says, graduated, wasn't making quite enough to pay them back, went into default, messed my credit up, check my Equifax. So that's where that's from. Thought it'd be a good introduction to credit reports and what credit reports are. Here's another. I try to be a little bit jovial and comical, because I think I think credit reports and credit scores, even though there's a lot of math and numbers and finance, I think it can actually be kind of a fun topic. On my cartoon here, maybe we better airbrush this credit report before applying for a loan, right? So airbrushing your credit report. So why might you do that? So let's talk about what a credit report is. All right, so all a credit report is the it reports every time that you use credit, okay? But it's not, and I shouldn't say that. That's a little bit of an exaggeration, because it's really how much you use credit, and then if the person that you're using credit from reports that usage to a credit bureau, right? So we call those reporting agencies just a reporter, right? So it's basically if you have borrowed money or have used a credit card, and the person that you have borrowed that money from is a reporter, that goes on your credit card. So, it goes on your credit report. So all credit card companies, Visa, MasterCard, those are all reporters. Anytime you go, if you were to go for a home loan, if you were to go for a car loan, oftentimes those are reporters as well. What is not a reporter is oftentimes if you go and get a utility, so you may not see that on your credit report, even though that may technically be credit, right? If they extend you out a month, right, you use the Power Now, they send you a bill, right? So that is for your previous usage, and now you pay that, right? So they've extended you basically a month of credit. And even though they've done that, that doesn't go on your credit report, because let's say the utility company is not a reporter. On the flip side, though, if you don't pay that bill, almost all debt collectors are reporters, right? That's one of the main kind of devices they have to get you to pay your bill, is to be able to put those delinquencies on your credit report. So in some ways, things like paying your rent on time, paying your utilities on time, you may not have credit cards, right? And so what it's going to show is you have a thin file. You may not have a lot of credit or any credit at all, even though you are paying bills, you are being extended credit, and it's only because a lot of the people that you're dealing with are not reporters. That is definitely a problem, but I kind of wanted to let you know how those things get on your credit report. So who uses a credit report, and what is it used for? So oftentimes the credit report is going to be pulled when it's going to be a large purchase, right? So if you are going to go buy a home, right? And I know in Indian country, a lot of times we're living on res, and so it's not, you're not having to purchase a home. But in some places you can get, there's a 185 home loan, home mortgage. So where even though it's on res, the federal government is lending, right? So there is places where they do a loan for homes on res. But when you go and make a big purchase like that, the lender is oftentimes pulling your credit report to kind of look at those. They're looking at you with a much finer tooth comb than would normally be looked at if you were trying to get a credit card or a much smaller purchase, right? The cost of the home loan is so much that they really do tend to pull not just one credit report, but you'll see here all 3 credit reports. Other places where they use your credit report, a landlord may pull it and look more like with a fine tooth comb because he's extending you an apartment or a house. The credit bureaus, when they build a credit score for you, they use your credit report and the information off of there. And in some places, employers use it. It's actually, in some states, it's actually, there's laws against it, such as in Oregon, where we teach quite a bit. They actually have rules against using your credit in employment decisions unless you're in a financial capacity. So, but in other states where that's not prohibited, let's say you're going and wanted to be a truck driver, and the trucking company can pull your credit report and say, nah, this person, I don't think they're a good credit risk. And so, because of that, they just don't hire you, even though there's nothing else. I mean, you may be a fully qualified candidate. And that's why some states have put that, has put legislation like that to prevent that, because it prevents people that may have had, financial issues because of health issues, right? And so they couldn't pay their medical bills, and so it ruins their credit and prevents people like that from not being able to seek employment. Another place where they use your credit report is insurance companies. And oftentimes with insurance companies, there's been studies where it says, and this is for car insurance, that people with a DUI and perfect credit sometimes gets lower rates than somebody that has a perfect driving record but has poor credit. And it's just the insurance company thinks that, okay, maybe somebody that has poor credit may commit financial fraud, right? I mean, there's no proof that that's going to happen, but that's what the insurance companies have done in their, their beliefs. So you can see that having poor credit can definitely hurt you in more ways more ways than one. It's not just the ability to not get a mortgage or to pay a little bit higher on a credit card, but it could actually cost you a job, or it could cost you extremely higher rates in insurance. So let's talk about, so I just mentioned that getting 3 credit reports. Well, you get 3 credit reports because there's 3 major bureaus in the United States. And those three major bureaus are Equifax, TransUnion, and Experian, right? And we'll see those names pop up several times. But those are the 3 major bureaus in the United States today. And those, and you never know when somebody's making a credit decision, which bureau are they pulling from? And we'll talk a little bit about that, so you can see when you go to apply, maybe asking, which bureau are you pulling from? So you're kind of more educated on the type of things that a creditor is looking for. So let's first talk about how we go and get a credit report. So I had my picture here. Don't use these guys. I don't know if you guys are familiar with these guys, if you've seen the commercials. And I was just thinking as I was kind of putting this together, I haven't seen these guys in a while. These are the freecreditreport.com. If you've never seen them, they used to drive around in an old beat up car. They used to, they worked at a fish restaurant for a while. They were in a Renaissance fair. There was a whole bunch of different commercials that these guys played in, right? And one of the things, I believe that was Equifax that was running the commercials. And basically Equifax owned freecreditreport.com, and you would go and you get a free credit report, but they would take your credit card information, and then after 30 days, they would sign you up for credit monitoring and bill you $30 a month. And that's definitely something that you do not want to pay for, okay? So that's why we recommend, even though they would technically give you your free credit report, right? It came with some downsides, especially for the people that weren't diligent about canceling. So to get that information, the 2 main websites that people will use now, And I think, and actually, I've seen some Credit Sesame ads, but Credit Karma has been very big on getting out to the public and doing television commercials. I've really started to see Credit Karma. I don't know if you've seen them. There's a lady at a park, and somebody hands her cell phone, and she throws her cell phone in a lake or something, right? So Credit Karma, and essentially what happens on Credit Karma is you sign up for an account, and it gives you access to the things that are on your credit report. I think the two bureaus that Credit Karma is working with is TransUnion and Experian. So you'll essentially get the information that's on there. So you won't technically get like the credit report that you would get from them, but you'll get all the information that's on there. So I wholeheartedly can't say enough about signing up for either Credit Karma or Credit Sesame. One of the reasons that I really say it's a good thing to do is because they're both free. Right now, of course, nothing's ever free in life. If you wanted, how you're paying is you pay with your attention. So what they're going to do is, so the way Credit Karma makes money is that they provide ads to you, and they're going to send you ads for things like credit cards, right? They're going to look at what your credit score is, and they're going to say, okay, well, we're going to try to get you to sign up for this credit card, right? And then by doing that, the credit card company is paying Credit Karma a little bit, and that's how they make their money, through advertising. So I just wanted to let you know that. But as far as actually you paying any money, it's actually free. Credit Sesame is good and has a lot of the same features, but Credit Karma has gotten much bigger, and they've even had a program. I don't know if they're doing it this year. I haven't heard as much, but I know in years past, they're actually even they're even willing to prepare your taxes for free up to a certain income level, and a certain level of sophistication. So Credit Karma is trying to do a lot of things for you for free, and then in exchange for that, you pay with your attention. So so I wanted to say those two places first, but I wanted to quickly walk you through where you can get a free credit report. Right. And this is your actual official credit report. And that's a website called annualcreditreport.com. Okay. And I don't know if you guys have heard it, but this is what the website looks like. And we're actually going to go here right now. So I am actually going to stop my share here, and I am going to, let's see here. And I am going to share a different screen. And let me go to my website. Share my screen here. And share this right now. It's on my Facebook page. We're going to go over here. So here is annualcreditreport.com. I hope everybody can see this. Camille, who is my, let's see. Camille, I think can everybody see this? Everybody's got the annualcreditreport.com up?
Yes.
Okay. So, and let me enlarge this a little bit here. Oh, enlarging the wrong thing. Okay. So, annualcreditreport.com. This is a website that the federal government has set up in conjunction, and it says right here, authorized by federal law, has been set up in conjunction with the 3 credit bureaus, and they have agreed to provide a free credit report for each bureau to a person each year. Right. So where normally you would have to buy this or sign up for one of those services, you can get one Experian, one Equifax, and one TransUnion credit report each year. What has happened now because of the pandemic, they have actually been providing free weekly credit reports. So instead of only being able to get one credit report each year from each of the bureaus, you can now actually get a credit report from each bureau each week. So you can, but this program is actually going to end. It's scheduled to end on April 20th. So between now and April 20th, you should be able to get 3 or 4 credit reports for each of the bureaus if you wanted to check. So I would definitely encourage you, this is the time to do it, because if you wanted to, be able to get that and have no penalty moving forward, And it's not that you're going to, the only thing is if you want to stay on top of your credit report, it's nice to be able to have it and check it on a regular basis. So, but for right now, you'll be able to get one from each of the bureaus every week. So the way you go and do this, there's a number of different buttons that you can click on right up here, this big red button up at the top. This is how you would click. Okay. And it says, request your free credit report. And then you just click that. And let's see here. And so I click the button down there, and then you'll actually fill out a form. Your name, birth date, social security number. A lot of people are very worried about providing their social security number over the internet. I totally understand that, right? You want to make sure that you're on a secure network. You want to make sure that you're only at annualcreditreport.com. You can see this little lock up here. That means that this is a secure website. I'm checking to make sure that this actually says annualcreditreport.com, right? That it's not a different website. It's an HTTPS. That means it's a secure website versus HTTP. So I'm pretty confident that I'm in the right location. Going to another site that, for spoofing, there is that danger. We're going to talk about a way a little bit later to protect your credit. But the credit system runs on your social security number. So the scores are based on getting your credit report. You can only get your credit report through your social security number, right? When you go to apply for credit, they want your social security number because that is your identifying number. They've talked about changing things like that, but for the time being, that's the way it is. So if you want to get your credit report, this is the way you have to do it. Now, there is ways where you can actually mail in a request to the different bureaus. If you didn't want to do it on the computer, and it takes about 2 to 3 weeks to get that back. And there's actually ways that you can go to each of the different bureaus and they'll give you your address and what have you, and for you to send that in. But you'll fill in your social security number, where you currently lived, and if you've lived at a place less than 2 years, you would fill in the previous address as well. So I'm going to see if mine is worked because I have booted mine up here. What happens after you enter that information, you'll actually come here and you'll be given the opportunity to choose one of the three bureaus or request all three. So I'm just going to click Experian and hit next. And so I'd already put in my information and I just wanted to show you what happens next. So it's asking me to verify my information. I'm just verifying it. Okay. And this is what they do. They will ask me to verify information. They'll ask me to verify things like how much my mortgage is. Well, I don't see my mortgage price on there. How old I am. Well, I don't see that on there. Last 4 digits of your cell phone number. Well, you could, I don't see my cell phone. And then you hit continue. If you answer those questions, these are challenge questions. And if you answer these questions correctly, then what they will do is they will give you and show you your credit report. And that's all there is to it. That's essentially how you will be able to get your credit report totally free of charge. And you can go back and get your Equifax and your TransUnion as well and be able to check those. Now, so why would we want to pull all three of those? So let's take a look at what is going to be, actually, let me start my presentation back up. Let me go back over here. Okay, so now that we have our, we've actually pulled the credit report, what's that credit report going to tell us? So what we're going to do next is I'm actually going to actually share something else. And Camille, if you would actually share the the sample credit report. So we have a sample credit report. You guys don't have to, if you feel free to download this, but you don't have to open this up right now. I'm actually going to open it up here on screen. And sometimes I can't walk and chew gum at the same time. So I'm going to share my screen again and share this credit report. So this is not, this is a few years old, so it's going to look a little different than this, but this is going to give you kind of the general gist of what you're going to see on your credit report. The general sections are going to be about the same. And I just want to kind of give you, kind of a rundown of what, what your credit report will look like and what information it'll have on it. So, up top here, we're going to have this key, and it'll have your information. It'll have the number, so that's the actual number of the report that they pulled for you, when that report was pulled, and just has links to all the different sections and talks about the different sections in the report. Very basic and very simple so far. Okay. So the first section that we're going to come to is we're going to see potentially negative items. Okay. And so, and it will be called different things for different bureaus, right? But generally, these are things that are hurting your credit report, all right? They're hurting your credit score. There are things about, generally what you're going to see in here is you're going to see items that have not been paid, right? And it's not been paid over a short period of time. It's usually they're 30 days late, 60 days late, or they're severely delinquent. Maybe it be a charge off, maybe there's a tax lien because there's that they put a lien on you for for not paying taxes for some reason. But those are things where you owe money and have not paid as of yet, and they've gone delinquent. So as we look here at the negative items on this is John Q. Consumer reports. So he has a civil claim right now. Now it's showing paid, but because maybe that he had this civil claim and he didn't pay it when it was due, they put this negative item on there. So, and it shows that it was only for $200. And so you can see even for very small amounts, those can go on your credit report and harm you. Now, we'll talk about when things drop off in just a few moments. But what happens is, even though you may have paid and brought your account current, those negative items will stay on your report for a certain length of time. So that's why it's, as difficult as it is, anytime you're extended credit, you want to make sure that you have a good payment record, because it's also the largest component of what makes up your credit score. Okay. So, under potentially negative items, these were public records. So these are generally court cases, things that, judgments, or some sort of taxing agency. So in this case, he's lost a court case. And so they put that on because he didn't pay the judgment from the court case. This could also be if there was a tax lien. He didn't pay his taxes and they placed this tax lien on him. So here's a negative item, and this was a credit item. So he was extended credit and he did not pay it, right? And so you can see right now it is paid, but it had gone past due 60 days, right? So he did pay it. So they do note that it is now paid, but it is past due 60 days. It's always better to pay it than to not pay it. But once it goes past 30 days, they're going to put a past due 30 days. And once it goes past due 60 days, they'll put that 60 days. So, and so here for this was it looks like an installment loan. So this could have been for maybe a car loan or something, or some purchase of an item, let's say a refrigerator or something like this. And he didn't pay it. Well, one of the things is, we'll talk about errors on credit reports, but one of the things that you'll notice is even on a credit report, even on, this is a sample credit report put out by Experian, right? And so I just wanted to bring you up here to the top again. I'm sorry to kind of, I don't want to make you sick by going up and down, but let me just go up to the top. You see this report was pulled on 4/24/2012, right? So every date should be before 2012, before April 24th, 2012. That's technically when the report was pulled. But you can see as you come down here it shows the date of this credit item was opened on October 2012. It's not even possible, right? But that's even on the sample report, there's errors. That's one of the reasons why you're going to be pulling your credit report, because you want to check and say, are the debts that are on the negative items that are on my credit report, are they mine, right? Are they being reported accurately? Is something that should have dropped off my credit report, is it still on my credit, is it still on there? Those are things, that's why you're pulling your credit report and you're checking, because you want to make sure that only the things that are on your credit report, are the only things that are on there are the things that should be on there, right? Things that are legitimate, something you didn't pay, or on the flip side, good accounts, right? So those are some of the things that you're going to be checking as you go through your credit report. Okay, so those are some negative items. Here's another thing. You could see it went to collection, so it probably wasn't being reported. Probably the cable company wasn't a reporter, but because he did not pay $95, it went past due, and then they sent it to collections, and then the collection agency placed it on his credit report. Now he's disputing this item by the customer, and so if a landlord is looking at this and reviewing it, he may say, "Oh, okay, I see he's disputing this," and he can ask about that. But if we're looking at just your credit score, if you're looking at just your credit score, the credit score is going to be calculated even if you put that note in there. So that's one of the things, because there is the ability to send in a report and say, hey, I'm disputing this, this shouldn't be listed, or this is the reason, and they'll put that note in there, but they won't take it off of your credit unless you do a full dispute and you say, this is not mine and I shouldn't owe that. Okay. And then, so here's the next section. It's called accounts in good standing. And all this is these are accounts of credit accounts that you are paying on, paying as agreed, right? And these could be credit cards, could be loans. You can see here, the first credit is the automobile auto finance. So this is a car loan and he's paying on as agreed. His recent balance as of April 2012 was $7,984. Here is another, this is a revolving, so this is some sort of credit card that he had, and this was closed and it was never late. But he closed this, and what happens is this will stay on his report even though it was closed for a number of years. And like I said, we'll review that in just a second. But because it was an account in good standing, it continues to help him for a period of time. Okay, so those are the negative items. Those are the good items. There's other things that are also on your credit report as well. These are requests for your credit history. So things like every time that you go and apply for credit, it's called a hard inquiry. And these requests viewed by others are essentially hard inquiries. So he has gone and he may have gotten the loan, or even if he was denied the loan, just the fact of him going and asking for credit, those go as hard inquiries. And so that's what's going on here. He went to Home Sale Realty, probably was looking for a home loan or a real estate loan. And so he went, and the date of that request is 7/16/2012. Here is M&T Bank. This is, it may have gone for a credit card. Here's Western Funding. It doesn't say what he went for, but those were just hard inquiries, okay, where he went and actually applied for credit. Now, it would be unfair and let me just say, a hard inquiry, it negatively affects your credit. Not a lot, but a little bit. But it would be unfair to have all these hard inquiries every time somebody checks your credit, especially because if you have a credit card, the credit card company has the right in the terms and conditions to check your credit at all times, and that they're oftentimes doing that. So there's another section, and those are requests viewed only by you. And what those essentially are called soft pulls, soft inquiries. And those do not affect your credit. They list on your credit report to show that those pulls happened, but they do not, when they are calculating your credit score, these do not affect you one way or the other, good or bad. And so you can see he's had a number of places here that has checked his credit for one reason or the other, and so you could see here are some different reasons why somebody may check your credit, but it doesn't go against you. This could be a creditor wanted to give you pre-approved credit, an employer who wishes to extend an offer of employment, and generally you can give somebody permission for that. But like I said, it's outlawed in certain states. It could be the Experian or other credit reporting agencies want to do process a report for you. So they actually, they have to pull your credit so they can generate that report. So, and then your existing creditors to monitor your credit activity, right? The people that have credit cards. Okay, and then finally, and you may think, oh, this isn't as important, but your personal information. This is actually a great way to check about ID theft, right? Is to look at, is this personal information, and this is going to be your name, your address, it may be previous addresses, it may be your place of employment. Are those accurate? If those aren't, if you see a weird name, if you see a weird address on there, there may be somebody tried to obtain credit in your name, or using your social security number. And so that's always a good thing to check on if you see those kind of weird kind of information in your personal information. So definitely another section that you want to check. Okay. And then there's just some things here about, if there was some negative credit, you can put a personal statement and different things like that. But that's essentially the credit report. So we've talked about how you can get your credit report, and we've talked about how you can, and the different things to look at on when you're going through your credit report. So let me go back here to the presentation. Just to let you know that 80% of credit reports have errors on them. We've already saw errors, and I'll just say, so if you notice where it says inquiries are 2 years, I'm not going to pull it back up for time, but on those hard inquiries, there was actually 2 inquiries in there. One inquiry was showing from 2006 and one from 2008. And the report was pulled on 2012, right? So one inquiry was 4 years old and one inquiry was 6 years old. Well, those are items that should no longer be listed, right? Because the inquiries should only be listed for a total of 2 years from the time the inquiry has occurred, right? So that's one of the things you're going to want to be checking. And this is how long things should be listed on your credit report. So a hard or soft inquiry should only be listed for 2 years. Delinquent items and foreclosures for 7 years. If you have a Chapter 13 bankruptcy at 7 years. And then there's only a couple things that are longer, and that's a Chapter 7 bankruptcy. It happens to be 10 years, or an unpaid tax lien. That actually goes on forever because obviously the government can do what they want to do. On the flip side, there's actually good things that stay on your report. So closed accounts in good standing. So we saw that credit card. It was closed. It closed, but it was still on the report. Well, that will stay on there from 10 years from the date he closed that credit card. And then positive accounts. So if you have a credit card that you're using and you have open, that will stay on basically forever until you stop using that and they close the account. But as long as that credit card stays open, that will stay on your account and be a positive for it. So one of the things that you want to be doing is getting your credit card, getting your credit report and checking over and checking to see, have things been on there too long that should have dropped off already? Are things on there that aren't mine? Is personal information correct, incorrect, right? And then what you do is, if everything's good, well, then everything's good. But if there are errors on there, you can actually dispute them, right? And there's a number of different ways that you can dispute it. You can contact the business. So if somebody has placed a credit, a delinquency on your credit report, maybe it's for not paying a bill, and you've subsequently paid it, or you paid it on time and they put it on there because they have some accounting issues. The easiest way to do that is to go back to the business and ask them to remove it, right? But if you're not having luck with the business, then there is actually a dispute process with the credit agency. And actually, one of the things that I should have done this, Camille, and what I'll do is after the webinar, I'll PDF this and send this to everybody, because instead of going through this entire process, because it can get lengthy, there's a number of different steps here. And then I actually have links to where if you want to dispute something on your credit report, there's actually links that you can go to for each of the 3 bureaus. All right. And we'll send that out instead of going through that now. Just know that if you find something that shouldn't be on your credit report, there is a way to dispute that. Okay. Camille, any questions as of yet? Or are we still good?
We're good. No questions.
Okay. Sounds good. Okay. So, now, if you guys don't know who this is Steely Dan, and it says, Ricky, don't lose that number. It's the only one you own. I thought this was kind of apropos in talking about your credit score, right? Because that is definitely an important number. So that is our second section. So let's take a look at, Sheila asked, can you go back one page? I sure can. So these are where to send disputes. And like I said, I will send this out to everybody, but, and you can actually even search these as well. If you just search the 3 different bureaus, Experian, Equifax, TransUnion, and you put dispute next to that, these web pages should come out up. And also another site that I really like is Clark Howard, and the website is clark.com. This is a radio host. He's been syndicated. He actually just ended his radio show. He's based out of Atlanta, ended it after probably, I want to say something like 26 years. But he still does a podcast. And so you can pick that up anywhere you get podcasts, Clark Howard. But he gives some great financial advice, and he's got a really good website, and all these materials are totally free of charge, and you can get that at clark.com as well. All right, I hope you got it. I'm going to move on. Actually, I was going to say Camille can put that in the chat box, but she doesn't have my presentation because I forgot to send it to her. Apologize. But like I said, we'll definitely send you the presentation when we get offline. We'll PDF it and we'll email it to everybody. Okay, so let's take a look. Some more of my dumb humor. So your credit score is 470. So you're telling me there's a chance. I don't know if you guys are familiar with Dumb and Dumber. I think this is, 470, probably don't have a chance of obtaining credit. And we'll talk just briefly about that. So what is the credit score and how is that different from the credit report? Okay, so the credit report is basically all the different ways that you're using credit, right? The actual accounts that you have open, what those balances are, all of that kind of information. From that information, a credit score is generated. And what the credit score is it's just a model that they have developed that allows them to make a rapid decision on whether to extend credit or not, right? And on very small charges. So if you've ever gone to a like a J.C. Penney's, department store, a lot of times they'll ask you at the cash register, would you like, to save 5% or 10% today, and that's for you filling out a credit card. They're not sitting there with a reviewing your credit report to go over. What they're doing is they're going to make a decision based solely off of your credit score, right? So they can kind of punch in that information and then you have a decision almost instantly. And that's really what they're doing, and what they're being able to make that decision on whether to extend credit based solely on that credit score. Each bureau has a score, right? So there is no just one credit score. There's an Experian score, TransUnion has a score, Equifax has a score, there's a Vantage score. The most widely recognized and relied upon score, especially for large purchasing decisions, is the FICO score. And the FICO is, let's see here. I have a slide out of order, so apologize about that. So, oh gosh, I'm showing you my stuff. I didn't want to show you my stuff. I hope nobody saw that. No, I hope nobody saw that answer. So, actually, I'm confusing myself. I added this slide last night. So I want to talk about where can you get a credit score. And so we're going to talk about FICO score in just a second. But so where can you get your score? Credit Karma. So Credit Karma, because they team up with Experience and TransUnion, you'll get a couple of different scores there, right? And those are also free of charge. There's this site from Discover. This is the Discover Free Credit Scorecard. So you can get your actual free FICO score there. And the FICO, like I said, is the most dominant credit score. If you have a Discover card, they actually put it right on the top of your statement every single month. And there's other credit card companies that do that as well. And then some bank or credit union statements will also give you your credit score. So, but the easiest way to get it is from Credit Karma. Credit Sesame will also give it to you, or signing up for a tool like this Discover Free Credit Score. And Camille, if you could pop in the link, Camille is going to pop in the link of where you can actually get where this page is. You can also search it, Discover Free Credit Scorecard, but we actually have a link for you. Okay, so FICO score stands for Fair Isaac Corporation. The range of scores are from 300 to 850. So what do you think is the average FICO score in the US? I don't know if you saw it because I kept going back and forth, but type in the chat box what you think is the average score in the US. And I'll just give you just 1 second. Okay, we got 650. Anybody else? Okay, 640. Okay, so 600. Okay, so we're going lower. Okay, I'm going to reveal it now. So I'm glad the surprise wasn't revealed. You guys might be surprised at this, but here we go. 710. 710 is the average Fair Isaac credit score in the US. And actually 710 is actually fairly high. You'll actually see here on one of these next charts that it's a fairly good score. Okay, so here's some different FICO scores and how your FICO score is made up. Okay, so 35%, and that's why I said the largest portion of your FICO score is from your payment history. And so that's paying on time. So when you have a 30-day late pay or a 60-day late pay, that's when you will have issues with your credit score, right? And that's where you'll get hurt there. And you can see it makes up, almost 300 points, actually more than 300 points, right? So if you really mess up in this area, you're just going to have a really tough time maintaining a good credit score. It's just going to be impossible. So that's why one of the key things to do is to always pay your bills on time, even if it's just the minimums, right? And paying minimums on a credit card, it's going to cost you a lot of interest, but at least pay them on time, because if you don't, then it can really eat up your credit score. Next one is utilization. We'll talk about utilization in just a second and what utilization means, but that's actually the second largest. That's also about 300 points. And that is just about the amount of credit that you have available to you and how much of that credit that you're using. That's what your utilization, and they usually calculate that based on your credit, the amount of credit card availability you have. So the other types is length of history. That's just how long, there's nothing you can do there. Just, get credit cards and keep them open a long time. Types of credit. For some reason, they say having a mix of credit is better, but you can definitely have outstanding credit and not have a home loan or a car loan, just having a credit card. And then applications, that's this last 10%. All those are the hard pulls, right? So when we talked about there, the requests that others can see, that's how often that you have applied for credit, whether that's credit cards or loans. Okay, so how does utilization work? Here's how utilization is calculated. So let's say you had 3 credit cards, and these are your credit limits, right? And so we add those 3 card limit ups. That's $10,000. And let's say you owe $500 on one, you don't owe any on the next, and you owe $4,000 on the last card. So the total amount owed is $4,500. So you can see the different utilizations for each of the cards, but what we're going for is a total utilization. And all we're doing is dividing the amount owed by the credit limit. So 4,500 divided by 1,000 is 45%. That is essentially what your utilization is. It's the amount owed divided by how much available credit you have, your credit limits based on all your credit cards. What I will say is the number that you should be shooting for is 30%. When you have your utilization goes above 30%, it starts to hurt your credit score. Now, going back to this just for a second, this is put out by the Fair Isaac Corporation, and this is the estimates that they provide. But there's no one way to say, if you do this, your score will increase by 3 points or it will decrease by 5 points, right? It's all kind of a black box in their computers, their algorithms, right? So, but what they're doing is giving us some broad generalizations, right? And so I don't know, for every percentage point over 30%, how much will your credit score get hit? I don't know that. All I know is that above 30%, it starts to hurt your credit score, and the lower your utilization is, the more it helps your credit score. So like if you maintained a 0% utilization all the time or under 10%, that's how you can really maximize your credit score, right? But that's either one of two things. Either you have credit and you don't use it at all, right? Or you do use credit, but you have a tremendous amount of credit, right? So no matter what you're using is, let's say you have $100,000, you have 20 credit cards that are all got 5,000 on it, and you only charge on one, right? Well, you're always going to be under that 30% limit. You're going to be under the 10% limit. So that's having that type of kind of credit, the utilization, right? That's how you can actually maximize your credit score. But a lot of people don't want to carry that credit, and a lot of people don't have the opportunity to be able to get that level. They can't apply for that, or they may have to have a secured card and they can't do that. So we'll talk about some of those rebuilding strategies. But I understand that, I only work in Indian country, so I know that credit can somewhat be limited. And but I'm just trying to give you the best practices in how to improve credit. So, all right, so we've talked about how utilization works. And let's talk about the dangers of high utilization, right? So beyond hurting your credit, if you get out of whack with, and what I mean by that is the utilization really starts to creep up. So you can see in this situation, let's say you just have one credit card and you have a $10,000 limit, and the amount owed is $7,000, right? So you divide 7,000 by 10,000, that's 70%. A lot of times the credit card company will get nervous, or and this really happened during the end of the last decade when we had the big housing crash. A lot of credit card companies were very worried that they were going to have a lot of defaults, and so what they did is they saw somebody having high utilization, they would actually reduce your credit score. Excuse me, your credit score, reduce your credit limit. Okay, sorry, there's so many credit terms, it gets all jumbled up, right? But it's your credit limit, right? And so they would reduce what would be available to you. So let's say month one, you have a credit limit of 10,000 and you owe 7,000. And so you say, okay, I'm going to pay that down, right? Maybe your minimum is $100, but you go ahead and pay 500 on it. Well, the credit card company has gotten nervous. They think, oh, you're not going to be able to pay your credit card. We need to lower what you can charge, right? Because you maybe charge us 10,000 and now we're out of that money. So they actually lower your credit limit to 6,600. Well, look what it does to your utilization. It actually, now you're dividing 6,500 divided by 6,600, right? That's 98%. Well, that's killing your credit score, right? That's almost eliminating all 300 points there. And that does two different things, right? What they're going to do is, as you start going down because your utilization is so high, they're just going to keep dropping your credit limit, right? Eventually, until even if you pay off your credit card, they're just going to close your account, right? But what that also does is, because they've ruined your credit, you can't go and get another credit card. to prevent this or protect yourself, right? So it's so that is one of the dangers of having like a small balance and then charging it up, right? Or having a small limit and then always running, up to the amount that you have the limit on. That can really cause some problems for you in the long run and really hurt your credit in the long run. So I'm just looking at the time. I see it's 6 o'clock. I'm going to try to rush through this, but if you guys could just give me another 15 minutes and we'll knock this out. Okay, so how good is my credit score? So this is looking at credit scores and the different brackets and how you might go about getting a loan, right? So poor credit, so up to that 550. So when you saw that graphic about being 470, that's actually a pretty poor credit, right? You heard about the subprime crash at the end of last decade I was just talking about. A subprime credit is between 550 to about 625, 620. Acceptable credit. So in these areas, so back then you could get a loan and you could even get a home loan with subprime. That was one of the problems, right? The subprime borrowers were defaulting at very high levels, right? So you could still get a home loan even with subprime. What you're generally going to be doing is paying higher interest, and we'll see that on a graphic. So acceptable, right? So that is between 620 to about 680. Good credit is 680 to about 740 in that ballpark, right? And so we saw the average in America is 710. So the average credit in America is good, right? The average person, if we're looking at the average person, they have good credit. And actually excellent is anything above 740, right? So if you're 741 or you're 849, right? You basically are going to be paying the same rates. You have excellent credit, right? So you do not need to get an 850 to try to get really good credit. It's just really getting above the 740 to get into this excellent range. So what are the percent of Americans in different credit ranges? Poor credit, 0 to about 6%, 6 or 7%. Subprime, it's a little bit more than that, about 14%. 17% for acceptable. Good credit, a little bit more, maybe 19%. And excellent, the vast majority of people have excellent credit, about 42%. And that's why we see those averages. It kind of pulls up all the people with low credit because there's so many people with excellent credit. And I've taught this a lot on res many years, and it's like, well, heck, I know a lot of people that have bad credit. How can this be? Well, one of the things is even if you have no credit, that's what we were kind of thinking that is the cause. When you have no credit, you actually fall out of the system. You have what's called a thin file, and then you may not be calculated in here. So if maybe back 20 years ago, you got into trouble with credit card debt, and you had some accounts closed, and then you just said, I'm just going to pay cash from now on. And so you never really went and got additional loans or anything. And in Indian country, you don't have to get loans. You could, if you're getting, getting a car, you might need a loan for that. But if you're living on the res, you may never have to get a home loan. And so those are some of the issues why I think in Indian country, you may have experienced within your family either low or no credit scores, and then seeing how when they say almost half of Americans have excellent credit. And so just wanted to kind of put that out there because I know when we were thinking about it, it seemed kind of strange as well when we were putting these numbers together. Okay, so what happens with your credit score? Okay, this is graphics kind of flipped, right? Because we're actually starting with excellent credit down at the bottom, and I think we should be starting at the poor credit down at the bottom. So I'm going to work from the top and go down. And so what happens is when you have poor credit, and really this is kind of incorrect. If you really have a 300 credit score, you're not going to get a mortgage loan, right? Nobody is going to lend on that. It's just too risky. Okay, so but as you go down, what you can see starting to happen is those mortgage rates will drop. Now, this was done a number of years ago. These percentages aren't the same. Right now, we have extremely low home loans. You can get a 15-year home loan in the 2.5%, 3%. So it's a full percent point less than this. But but you can see essentially as your credit score rises, the cost you pay for credit goes down. Also, the cost you pay for insurance goes down. The cost you pay for credit cards, you have the ability to get very low rates on credit cards. The credit cards are a little bit sneaky. It's not accurate all the time, because you can, when you have low credit, you can get very low interest credit cards. Those are available to you, but a lot of people still have high interest rate credit cards because what they're doing is they have reward cards, and you'll see all these different things with reward cards, 2% cash back or travel rewards. And so people actually get much higher rate credit cards, even though they have good credit, because they want to get those rewards. But essentially, what's happening as your credit score goes up, the cost that you pay to borrow money goes down, right? And that's the same thing in insurance rates as well. So that is one of the key things about maintaining a good credit score. Okay, so let's talk about tips, right? So how are we going to improve our credit score? So the main thing, first of all, just looking at the numbers, right? The biggest piece of the pie, 35%, was the payment history, right? So what we want to do is we want to maximize the payment history. We want to pay bills on time. Now, if for some reason I've been late before 30 days, right? And I've had that negative mark on my credit report. If you can avoid it being late, ask the creditor to delete once you make good on that bill, right? Not all creditors will do that, but some creditors will do it. What happens is if you have a really good credit score, even one 30-day late can really hurt your credit score. It hurts much less if you have really poor credit, because maybe they expect that from that type of a borrower. But if you have really excellent credit, even one 30-day late has, there's been stories of people even dropping 100 points in their credit score, right? So if you can't avoid being late, go ahead and ask the creditor to delete that 30-day late from your credit report. So the next one is utilization. Try to utilize less than 30%, right? After 30%, it starts to hurt your credit. So, maximize your score with less than 10%. So if you really want to get the highest score, you want to get above 800, get into those higher reaches, you want to be utilizing less than 10%. So what does that mean? That really means that if you have only one credit card, you've went out and you've got a credit card and you have $1,000 on it, that means you can never charge more than $100 in a month. For a lot of people, that's not really practical, right? And so even on the 30%, it's that may also be hard, especially you only have one. One of the advice that I give to people, if possible, is to find a way to get 2 or 3 credit cards, right? And this is not to get 2 or 3 credit cards and then charge them up. That's not what I'm saying. You got to find a way to have discipline. Some people put that credit card in a bag and they put it with ice, right? Put it in your fridge, right? The problem is that if you know the numbers, right, they come on your statement, you can still do online shopping, right? So do what it takes to where you don't spend the money, you don't put the charges on the card, but get additional credit cards to increase that utilization so that you can increase your credit score. Okay. Start early, right? That's that 15%. There's nothing you can do there but starting early, right? It just time is it's gonna take time to have a long credit history. Okay. Additional things I just mentioned: try to maintain at least 3 good credit accounts for that utilization, and also to prevent if something happens to where they close one of your credits, your credit cards, that you're that you're protected in that way. Different types of credit. But I wouldn't say go get a bunch of, don't go get a car loan just to improve your credit, right? Because that could be unnecessary spending, right? We want to improve your credit, but we don't want to hurt you financially in other ways, right? So I think those 2 last things, the mix of credit, I think that's less important, or that's definitely the least important of the 5 things. And hard inquiries, don't go applying for a lot of credit. If you focus on those other 4 things, having a mix of credit's not going to be such a big deal. So I'd focus on those other things, right? Starting early, don't applying for lots of credit cards, And once you got your 2 cards, don't apply for, don't be applying for a credit on a regular basis. Keeping your utilization low and maintaining a good payment history. If you do those 4 things, you're going to have a really good credit score. You won't have to worry about the credit mix. Okay. And why I say try not to close credit cards unless there are fees is because when you close one of those credit cards, right, if you have 2 credit cards, they're each 5,000, you got 2,500 on one, well, you're great, you're 25%. You close one of those cards, that doubles your utilization. Now you go to 50%, now you're hurting, right? So that's why you don't want to be closing credit cards unless there's fees. If there's fees on the card, try to get a new card without fees before you close the card with fees, right? That's they call that leapfrogging, and that would be one way to do that. Shop for loans within a short period of time. All that is if you're going for a car loan, you can actually go to a number of lenders within a 2-week period. They realize you're not buying multiple cars all at once. And so they look at all those car loans and they count them as only one loan. So in my last 5 minutes, build me up, Buttercup. This is the foundations. Don't break my heart. We're going to talk about that was really looking at the math. What are some other strategies that you can do to actually go in and improve your credit? So there's no quick fix. So there's these credit recovery programs that they talk about, and they actually charge you money to fix your credit. They do some unethical tactics, and what happens is they take your money, and in the end, all that stuff comes back to your credit, and now you're out the money and your credit's ruined. Instead, call somebody like the National Foundation for Credit Counseling. They have free and low-cost programs, and they can actually negotiate with credit card companies on your behalf, help you set a budget. They can do a number of different things. I didn't put different chapters up here, but what they do is they partner with local community service programs, and so they have chapters all over the United States that are here to help you. But if you go to nfcc.org, you can find a chapter near you. Okay, there's other programs. I would recommend going to your credit union. They have secured cards, starter cards, credit rebuilder loans. Basically, the way a secured card works is, let's say you go and put like a $500 in a CD. That's a certificate of deposit with the bank. They give you a card, and you can use it just like a credit card. As long as you maintain a good credit history after a year, they'll give you your $500 CD back, you get your money back, and now they convert that credit card to a regular credit card. So you can see, just by putting a little bit of collateral down, then you can get a credit card, prove that you can use it responsibly, and then go from there, right? Starter card, that's sometimes if you don't have any credit at all, they'll give you a very low dollar credit card just as a way to get going. And then over time, they'll continue to build up the balance. Another way, I just threw this on, borrow somebody else's credit. If you know somebody that has really good credit, or you want to give really good credit to your kids, you can make them an authorized user on your credit cards, but not give them the card, right? And then what happens with a lot of credit card companies that report that information for an authorized user, you will actually be able to transfer your good payment history, or somebody can transfer it to you. But you just want to make sure, if you have poor credit, you don't want to make somebody an authorized user under you, because then you could actually be hurting them, right? And vice versa. You want to make sure if you're being made an authorized user that it's going to help you. Finally, protecting your credit. So let's say you got really good credit. So I talked about earlier of monitoring your credit, by paying $30 to freecreditreport.com. And what credit monitoring essentially does is it alerts you if there's something negative on your credit report. So somebody tried to open a credit card in your name, it'll send you an email or a text message. Well, let me tell you something. Credit Karma does that for you totally free of charge. If you get signed up in Credit Karma, every time somebody tries to open a credit report or a credit card in your name, or they check on your credit, or they do a hard inquiry, Credit Karma is alerting you. So don't pay anybody to do credit monitoring. Just sign up for Credit Karma, because you can do it for free. The best protection, though, is getting a credit freeze. Now, before, you used to have to pay $10 to freeze your credit, $10 to unfreeze your credit. But now because of legislation. If you remember a couple years ago, Equifax had the largest credit breach in the U.S. history. Over 500,000 credit items were exposed to people. So they actually went in and were sued and came out and agreed to now freeze and unfreeze your credit totally free of charge. And you can do that with each bureau. And so that's what I would recommend. And what that does is when you go and freeze your credit, nobody, including yourself, can open credit in your name. And if you want to apply for something, and I'll tell you, one time my wife wanted a lawnmower. We live on a ranch, and she wanted a riding lawnmower. And so Lowe's had a good deal. And so we went down there and we were going to get a credit card because they give you even more money off if you got the credit card. And so I said, okay, we'll do it. Well, I had to go unfreeze my credit before I could go and apply for that loan, right? And that's what I was able to do. I was able to unfreeze my credit. I did it on my phone. It took me about 5 minutes to do. You do have to remember your number. They give you a PIN that you have to remember. And so there has been people, Lynn, who works at the IDRS Acorn Project. You've probably taken a webinar from Lynn. I helped Lynn freeze her credit. Well, she, because I'm the one that helped her do it, she, didn't even think about it. She doesn't even think about, oh, my credit's frozen, right? And most people don't, because you don't realize, you think about, well, I don't want to freeze my credit because I may need it. Well, you'd be surprised how often you do not apply for credit, right? It's not something you do on a regular basis. But she had her credit frozen, and she went to apply for credit. She went down and wanted to buy some furniture for her house, and she was just there, and they're running it. They said, I can't get this to go through. And is there something wrong with her credit? She goes, no, I don't think so. And come to find out, it was because her credit was frozen, and they kept trying to pull that bureau. So, you do have to remember that your credit is frozen. You do have to be able to unfreeze it, but it is a very easy process if you have your PIN code to do it, and can be done in a matter of minutes. So that's what I wanted to share with you there. So I am open for any questions. And so I'll come back and just answer this in just 1 second. Actually, before I do that, I am going to take the question. So here, Sheila Smokey said, where do you find a credit card without fees? And I'm wondering the type of fees that you're talking about. So almost every credit card, I wouldn't even know if there is a credit card that would like if you were to pay late, they wouldn't have a fee on there, right? Almost every credit card has a late fee. So there are no credit cards without fees. If you were looking for something, if you wanted to carry a balance on a credit card and you wanted to have a low interest loan or a credit card that was more forgiving on fees, the place I would look for is actually the credit union. Credit unions before, they used to have a special job, like they would be for teachers or it'd be for nurses. Now it's generally, the credit unions are open to anybody. But credit unions are there for their members, and so they often have these programs. And so generally, I have seen very low interest credit cards at credit unions, sometimes in 6 or 7%. And that would be kind of the best way. And then, of course, also, if there's a thing where you get into trouble, the credit union would be much easier to work with than to go and deal with a much larger, much larger bank, right? And those credit cards are going to be usable everywhere. They'll have the Visa or the MasterCard logo. So that's where I would go to find a credit card, not without fees, but with low fees. And more questions, please send them in. You can find me at mark@idrsinc.org. I'm always willing to help. I just wanted to run through a couple things before I shoved off, though, and I'll come back, so feel free to continue to type questions in. I just wanted to share a couple things before we shove off. I wanted to let you know that IDRS, for those of you that are located in California, we have been pushing the California Small Business COVID-19 Relief Grant Program. I know some of the folks have complained that they're not eligible for it because they don't file a Schedule C. And we understand we were trying to push them to change that, but we couldn't get them to do that. But if you don't know about it, or you know somebody who might be eligible, there's a lot of money at stake. And the next 2 rounds are going to give away $1.5 billion to small businesses here in the state. So I would definitely encourage anybody who is eligible. And our main goal is to make sure as much of that money as possible goes to Indian country. So if you have a business tax return because you filed a Schedule C, or you know of another business in your community, there's a lot of people we're still finding that don't know that this program exists. So if you know anybody out there, spread the word, because this could be free money, right? There's 3 tiers, 5,000, 15,000, and 25,000. And they're trying to make sure that these funds go out to a lot of different organizations. So even though there's a lot more people that are urban, they're making sure to give money to rural areas. They're giving, making sure that money goes to different minority groups and trying to spread that out as well. So I want to encourage everybody as possible to apply. We're going to be having a webinar about that, and I'll talk about that in just 1 second because I have a slide for that. Tomorrow, if you're interested, tomorrow at 11 a.m. Pacific, we'll be having a webinar on social media. This is our monthly series, and we're going to be going over the program Canva. All right, and we provide these webinars totally free of charge. So please check that out. You can actually register at ntv.bz/Canva. This is the webinar I was just talking about. We're going to be talking about the changes in the grant program, anything you need to know, and how to walk through the application. That's coming up on March 25th, right, on Thursday at 5 p.m. the same time. So you can register for that at ntv.bz/CA COVID, California COVID. And if you're interested, if you haven't ever taken our Etsy craft entrepreneurship, this is a 4-session workshop. Really goes through how you can set up your store and get on Etsy. And we'll be running another session of this in April. It's basically 4 sessions over a week, and we're going to be running this in the evening this time. And so you can register at ntv.bz April Etsy. Okay. Last but not least, please check us out. I mentioned before our website, nativebiz.org. Our Facebook page, where we post a tremendous amount of stuff, and sometimes it's a little bit faster, and because we know a lot of people are coming there more often, so we put stuff out on our Facebook page, and that's facebook.com/IDRS Acorn Project. We also do the same for Instagram. We have instagram.com/IDRS_Acorn Project, and we're also on YouTube. So you'll probably see your name. If you posted a question, we'll go up there because we'll put this recording up as well on ntv.bz/YouTube. That's how you can get to that. So with that, I'm actually going to scroll back here and see if there's any last questions. And if there are no other questions, I'm actually going to let you guys go. And I'm sorry that I kept you guys over. There's just so much information when you come and you get into the credit system, and I wanted to give you at least something where you guys can get going and be able to improve your credit score and get those credit reports. Camille, I'm not seeing anything in the chat, but I can't bring it up for some